Good morning, traders. It is Monday, the 2nd of November, 2015, 8:01 a.m. Chicago time. First day in November. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Lots of news overnight. We're going to take a minute now to review what's moving the market. China's manufacturing sector contracts for the third straight month. China's official manufacturing purchasing managers index stood at 49.8 in October. Any reading below 50 is contracting, and that was the third straight sub 50 report. We saw a drop. The ES moved down to 2064 and a quarter on that. Japan's Nikkei PMI slipped to 52.4 in October from a preliminary estimate of 52.5. But still, the Japanese economy is in an manufacturing is in an expansionary mode. It's performing a lot better than anticipated. Manufacturing PMI reports across the Eurozone were broadly better, which had us revisit or pull back on the sell-off later in the morning. So a lot going on overnight, pretty wide range. We'll dig into that in a second. HSBC third quarter pre-tax profits jumped 32%. This is a major bank, as the bank had fewer fines to pay than in earlier reporting periods. So it's always interesting to hear about a bank that's doing better because it's not getting hit with a lot of fines. So it's not sure what to think of that, but it doesn't sound like a very good business plan there. Asian markets closed lower with Japan's Nikkei down 2.1%, Hong Kong's Hang Seng down 1.2%, and China's CSI 300 down 1.6%. Europe's mostly strong. The DAX is up 1.22%. The Euro Stoxx up 0.85%, and the Euro is up 0.41% again on strong PMI data out of Europe. This is the first week of a new month. This means that we get reports on manufacturing, which we will today, and labor in the U.S. economy. We have ADP on Wednesday. We have non-farm payrolls on Friday. Once again, these reports will be watched carefully. The Fed, for what the Fed would consider progress, but realized and expected towards its objectives of maximum employment and 2% inflation. That is exactly what they said last Wednesday. So a report on Friday that's in the low 100,000 zone is good enough. Prints in the mid 200,000 vicinity could help the Fed pitch a December rate hike even more convincingly. So the NFP this Friday is really big, but we'll keep an eye on the other indicators, PMI and so on. For the week, for today, we have PMI, manufacturing PMI at 8:45. That's 15 minutes after the open. Expecting 54.0. That's a final figure. Construction spending at 9 Central, 10 Eastern, expecting 0.5%. ISM manufacturing expecting 50.0. Remember, 50 is right there on the line between expansion and contraction. Also at 9 o'clock, and ISM prices paid, no estimate, also at 9 o'clock Central. And as far as speakers, we have Fed Speaker Williams at 11 Central, 12 Eastern. And then we have earnings on AIG after the close, expecting 1.04. Since it's Monday, a quick overview of what's expected for the week. Tomorrow we get UK construction PMI, U.S. factory orders, ECB's Draghi speaks. By the way, Draghi spoke over the weekend to an Italian newspaper, again reiterating that the ECB is ready to act if it does not see the economy recover as expected. Wednesday, we get services PMI out of Europe, U.S. ADP, which is the payroll company, trade balance, PMI services in the U.S., ISM non-manufacturing in the U.S., Fed's Yellen, Fisher, and Harker. Thursday, German factory orders, construction PMI, and retail sales. The BOE minutes, BOE rates and minutes on Thursday, another big one. ECB's economic bulletin, ECB's Draghi in the presser, and Fed speakers. Friday, we get German industrial production, UK industrial and manufacturing production, trade balance, a trade balance in the UK, U.S. non-farm payrolls, consumer spending, and Fed's Bullard and Brainard on Friday. Packed week. It's the first week of the month, so we're always going to get a ton of stuff. So let's switch gears real quick and look at what we did on Friday versus what was expected. Just so that we get refreshed. Here's this is basically what I was showing on Friday. I was looking for the market to get responsive selling. So the idea was, if you recall from Friday, this is on YouTube, you can watch this yourself, around 11 minutes or so in, we get responsive selling. The expectation is to test value high on this video. Let's look at what happened. Yes, we got responsive selling here. We tested value high. You can see tap, tap, tap right here. Multiple tests of value high. Then a beautiful setup back to the mid before it pushes to the next target down, which is the 80-50 point of control. We get to the 80-50 point of control, which would be the target for this mid short. And then we chop around as expected. Remember, Thursday was a very balanced day, very classic textbook balanced day. So what do we look at in balanced days? We look for value high, point of control to be tested, and value low as the next area for a test. So it holds the point of control. What does it do? It drops down to value low for another test, and then it just floats sideways and then starts to move back up. We left Friday with a very weak high, given that it's a double top there. You can see there's a double top in the morning and in the afternoon. So this is something to watch as a big target above 88.25. Remember also that we are in a big high volume node area in the big picture, and then it's sold off. If you look at the 15-minute on Friday, and I did warn on the Trader Bite that morning, I did warn about the close. And we got really high volume and a big drop on this fall here. So that's the end of month rebalance. But overall, the market did what was expected, responded down to value high, push up, respond down to point of control, to value low, and then it floated sideways. It did leave us with a double top, as I said. And overall, we had a normal variation day, but overall this left us with a fairly balanced profile, but a very with the close the way it is, a very bearish outlook. So looking at today, if we look at the overnight session and what has happened, the overnight session shows sellers coming in, pushing through right away on the Chinese news right here in anticipation of the Chinese news, and then a lower low, and then as Europe opens right in here, we see the good news come in and push the European markets a lot higher, and pretty good delta as it did that. Since then, completely sideways, short-term traders in control, and is pushing the high. The problem with last night's action is that it leaves us with a very odd distribution on the overall auction. We have two distributions. We're inside of the Fed release. So here's the Fed high, Fed low. We're inside of this area. The market is responding back and is going back into Friday's range. So it leaves us right on the edge of the next key area down. and where we just came from. So if we look at this more closely, we see that we're basically pushed into the Fed day release, the Fed day morning, and have come all the way back. So that takes away the return, the responsive buying trade, pretty much. So this puts us in a light that makes it difficult to predict which side is likely to take control. In either case, I'm looking for resistance at the 2080.50. Again, note that the point of control on Friday was exactly the same as the point of control on Thursday. Higher highs, higher lows, but the value and balance and the value and the point of control are in line. This is a market that worked very hard to move higher, to put a higher print in, but has not succeeded to do so. And we're in this massive high volume node here. So there's a lot of turbulence, but the idea is that if it fails while moving up, the expectation is it would rotate down and get us back into this lower high volume node with basically the possibility of 2030 again. Where do I get 2030 from? 2030 is again this cutoff point right here. We are trading in this area. We're trading in this acceptance area from the beginning of the year, and we are stuck here. Below us, we do have that 2060 something, 2064. 2067 area as a magnet in this region, but overall the market is stuck here. I believe that today will likely be a two-way trade. The hypothesis for today is responsive back up as soon as we get in. The expectation is for the market to continue its drive upwards. There's a strong potential test all the way up to value high, and then I expect it to fail and hold sideways unless there's news, and then start walking down. I don't expect it to sell off very hard. Again, we're in a high volume node, and there's interest both ways. That's why the high volume node exists, is because it's seen as a decent price by the buyers and the sellers, and therefore there's an exchange in contracts. So overall, I'm not expecting too much on the upside. I'm expecting a lot of chop today and going into the rest of the week. We do have some big numbers coming out, so you need to watch out for that. A quick scan of the market. When we go back and look at how the market has performed since the sell-off, since the August 24th sell-off, essentially the S&P 500 just made it through in the last couple of weeks from the 0 point and is positive 2.47%. Crude oil strong, metals are weaker, but it's very interesting to see that this leader, this former leader, healthcare, the healthcare sector has still not fully recovered. Transports are in line. The financials are flat also, and then the leaders are techs. If you look at the Nasdaq, it has made new all-time highs since the correction in August. Followed by the XLY, which is the consumer discretionary sector, and industrials. So overall, the recovery has been meh, not too much participation across the board from the underlying sector, and that's something to keep in mind. That's cause for a lot of chop. The euro is lower, and the dollar and the Japanese yen are higher. The treasuries are below zero, and the Bund is higher, as is just because the euro is lower as well. So overall, it's moved quite a ways from that low, but it's not. It doesn't have the participation of the entire underlying sector. Finally, if you look at Friday, Friday versus Thursday, Friday did make a higher high in breadth. And is basically sitting sideways. We have not, even though we made a higher high on Friday over the last few days, we're still below where we were on Wednesday on the Fed day. So participation by the breadth across the board is not as high either. So this is suspect. To me, the market looks like it needs to pull back to entice more buyers, or it's likely to pull back. I shouldn't say needs. It's likely to pull back to advertise lower prices to entice more buyers. Again, today the expectation, the primary hypothesis is responsive back up into value high, sideways, and then it's really difficult to tell from there what it's likely to do. The anticipation is that if it does not hold the upper distribution in the overnight, if you look at the overnight chart, if it's not able to hold this upper distribution and starts moving below this 2072, then you're likely to see 2065 area this afternoon. That's all I have for you. I know that's an earful, but it is Monday and it's a pretty busy morning. So good luck to you today, and I'll catch you tomorrow. Take care.